Right now, a lot of numbers coming out of the latest consumer price index report today. It shows inflation went up, but less than expected, and that gave the stock market a bit of a ending to trading today. A little down, I guess we could say. Started off kind of high, but of course we know a lot can happen in the day. So the question is, what does this really mean to the average consumer when we're talking about the consumer price index? Ben Ayers is a senior economist at Nationwide, and thank you so much for being here again as a guest of ours. Very frequent, thank you.
Yeah, no problem.
So let's talk about this. CPI shows inflation cooled, as they say, it slowed down. This is good, right?
Yeah, it's a good sign. You know, we did see overall inflation rate slowed to 2.3%. It's the slowest pace since 2021. So we're still finally getting out of those pandemic impacts. But I think most importantly, this is the third straight month that we've seen some cooler readings from the CPI, and that's just a positive trend heading into the summer.
So when it comes down to saving me money, explain what that means to the average consumer, because we're hearing now some food prices are down, air travel is down, price-wise.
Yeah, there's several items that are really cooling off, you know, particularly on the services side, where that was really the big bugaboo over the past couple of years, was service costs were remaining higher. We are seeing some cooling on that front, and that probably means some cooler prices for consumers. We're not out of the woods yet. Obviously, we're keeping a close eye on those tariff impacts, and didn't see much of that in April, but maybe some soon. And
so when you say they're cooling, I mean, we saw so many people, we couldn't afford to do things, go places, buy food for our families. So now this is really good that will help us hopefully in the short term.
Yes, yeah, we're seeing prices come back to earth. You know, particularly we're still seeing wage gains that are pretty positive. And so that balance where wages are going up, prices maybe not going up as much as they were, just helps people catch up.
So you mentioned the tariff situation, Ben. The question is, the tariffs are still a little bit up and down. It seems like it might have plateaued, the craziness of it all. Will this last, the CPI index being this low?
I think, unfortunately, this is probably the low point for the year. I think when we go forward, especially as we get into the summer months, we'll see some of those tariff impacts come through. Now, we did get some good news this week that, you know, those high tariff rates, particularly on Chinese imports, were lowered a lot, and that's going to help. And so we're not going to see as much of an increase as we were worried, but we still think those prices for many goods are going to start to rise.
Start to rise. All right, so basically you're telling me I should start my Christmas shopping now instead of in a couple months.
You know, there's a little bit of that. We've seen a lot of that over the first couple of months of the year, people trying to get ahead of the tariff increases. I'm hopeful that we're not going to see huge increases in cost, but certainly, you know, impacting consumer behavior for sure.
Well, we'll be sure to tap you if we start seeing these numbers fluctuate even more. But Ben Ayers, thank you so much. You always kind of break it down in very simple terms for people to understand, and bottom line, saving us money too. Thank you.